if you don't know what Italian BTP limits are, they're effectively as illiquid as trading the Nasdaq. Okay, now throw in an Italian election and some extreme volatility, and you kind of get the idea that there is a scene set for chaos. Anyways, for some reason I had 13 BTP limits. Now, to give you an idea of what that means, effectively the BTP moves in 1 tick increments, and for every increment it's 10 euros. Now, with 13 limits, it means I'm taking a bet for every 1 tick increment that the market or the bet size is $130 per 1 tick, or sorry, 130 euros. So call it $150 per 1 tick increment. Now, to give you an idea of how much the BTP can move, it can move 200 to 300 prices in a relatively short space of time. Okay, so I was completely over leveraged, had no clue what I was doing, knew nothing about volatility. I just had these limits at my disposal. Now, just to give you an idea, at this point in my career, my trading account, okay, I was backed by a prop firm. My trading account was down around 12,500 euros. Okay, that was all those desk fees and all those fixed fees coming out. So I was making money trading, but I wasn't able to break even and cover my costs every single month. So I had a down account. I had 13 BTP limits. Effectively, I could risk 130 euros per price, and it's one of the most volatile events that it was definitely the most volatile event I'd ever seen in my career, and to this day, probably one of the most volatile events I've ever seen. Now, let me give you an idea of how things went down. Market opens at 7 a.m. and I was emotional and frustrated over the last couple of months. Okay, the reality is I'd been doing the job for 15 months, making money gross, but could never cover fees, wasn't earning a wage. I was kind of getting to the point where I was like, what's the point of all of this? It doesn't feel like I'm ever going to make any money, and this whole thing is just, some big facade, and the only people making money is the prop firm. Okay, I had that belief in my mind because I simply couldn't grow a trading account. Now, at the open, I pretty much said, fuck it. Okay, I know that sounds crazy, but I had nothing to lose. It's not my money. It's the prop firm's money. And if I lose, so what? I get up, I walk away, it's their loss, not my problem. But if I win, different story. If I get it right, I'll take a gamble, have a crack, and, hope for the best. So it was a bit like a lotto ticket. So I thought, you know what? Why not? Plus, at that point in the day, it was 7 o'clock in the morning. None of the risk managers were there. Okay, so 7 o'clock open, it was pretty much a free-for-all. Now, I sold the open. And I sold all 13 of them. I didn't hold back. There was no buggering around. I just went short the open 13 lots. Okay, all in. That's what it was. And I got filled. And the next thing, the market volatility stopped. So we call that a white box or a volatility stop out. Now that happens where the exchange says, look, it's too volatile. We need to stop things because we need to re-auction. Because if we don't, we can have significant price movements that create problems for big investors, for big liquidity providers. Okay, so they do it to safeguard the market more than anything. Now, at this point, the market started auctioning 200 ticks lower. Now, remember what I said to you. I'm betting $150 per tick, and it's now auctioning 200 ticks lower. So at this point, I have a look at my P&L box. I can see it there, and it's showing something around $29,000. Okay, remember, I was down 13,000 odd on the account, or 12,500, and now I'm showing a positive win, potentially unrealized, of $29,000 odd. And so the box starts to move, and it starts to pull back a little. So it goes $29,000, and then it's only showing $25,000, and then it's showing $20,000. And at this point, I'm going, just open the damn market, because I'm trying to get out at the open, literally just cover the trade, risk-free. I'm guaranteed to profit. And this thing just keeps bidding. And I saw a $15,000 P&L, then I saw a $12,000 P&L. Remember, I can't get out. I have to wait for the market to open. Someone has to transact with me. And the next thing, my P&L goes minus $2,000, minus $5,000, minus $9,000. Now you can imagine at that point, I've gone from 29,000 positive to minus 9,000 negative in a space of, this is all of 60 seconds. And that's it. That's me kind of in my head going, it's the end. But obviously I'm still kind of focused, and I put a bit in the market just to cover somewhere around where I entered. The market opens, bang, takes me out. And I look at my P&L, and I'm $500 up. Now, this was one of the biggest anticlimaxes of my career. But this was a breakthrough, a bit of a stupid, reckless moment. But it was definitely a breakthrough moment for me. And there were some lessons that were not lost on me. I want to share those lessons with you. First, there are times in your trading career where asymmetric opportunities will exist and the odds are in your favor. You have to take those trades with more leverage. Now, I'm not saying all in. That's stupid. And no doubt if you know my career, you'll know that I've been caught on that exact same mistake in 2016, where I pretty much lost almost half of my trading account. Okay, so it's not that I didn't pay to learn that lesson at some point in my career, but the reality is you do need to put on more leverage when those asymmetric opportunities exist. 2, to grow an account, you need consistency, but you do have to sprinkle a trading year with a few big winners. In other words, it's not enough to just come in every day and make that $100, $100, $100. Every now and again, you have to make the $500 day. You have to make the $1,000 day. You have to make those days. Otherwise, you're never going to get the account growth that's needed to get those position sizes to increase. Lastly, the hardest part of my career was constantly wondering, how am I ever going to make money as a trader with all these fixed costs and this barrier? And how am I ever going to get beyond that pivot point? The reality is that once you get to that point, once you get that account growth, and as a result, those position sizes start to increase, it all becomes easier. It's not enough to have consistency, because consistency is not enough. There are a lot of traders that are consistent. Okay, making $100 is great every day, but that's not how you build a trading account. Now, yes, respect to those traders that just want to make the $100 a day and that's sufficient for them. I get that. But for most traders, you're hungry, you're ambitious, you're doing all the work, you're doing a very difficult job. You've got to pay yourself. And the only way you can pay yourself is by taking calculated risks. Okay, when the time is right, when the odds are very heavily in your favor, you must take calculated, leveraged risks.